Good morning and welcome to the XM.com weekly market update. And joining me back in the studio this week is Peter McGuire. Welcome, Pete.
Good morning, Andrew.
Welcome back.
Oh, thank you very much.
Been on the road for a few weeks?
Yes, I have, and a lot of exciting things over there in Europe and certainly the Middle East.
Yeah, for sure. All right, well, let's get into these numbers. Start domestically. The consumer confidence numbers came out this week, a negative number. They were expecting a positive number, but it's not unsurprising looking at the state of the Australian economy at the moment.
Absolutely, yes. What do you say? You know, the confidence level, and that all comes down to so many inputs going through that, you know, from workforce to affordability, inflation, all of those, I suppose, components, and that tells you the story, doesn't it? It really just shines a light really much on it.
Yeah, for sure. And then if we look at the Aussie dollar, which is up, which is, once again, two things to look at. There's talk that the RBA may put up interest rates again next month on the back of trying to control inflation, but also you've got a weaker US market from an interest rate perspective where they're we'll talk about that a little bit later, but that's obviously given some support to the Aussie dollar and potentially it could go a little bit higher.
Yes, it could. I wouldn't be surprised. Maybe take a 67.50, 60, 68. That US dollar's coming off a little bit as well, back under 105. But as you said earlier in the confidence Westpac, they're all the issues that people are worrying about. And they're saying, well, if we see a rate rise, is that going to actually hurt my business even further? Or, you know, the affordability or, you know, job layoffs. All of those factors go into the mix, don't they?
Yeah, but once again, this could go up a little bit more yet, particularly as those interest rate differentials narrow.
Yes, exactly.
Which is how the interest rate markets work. So looking at the US, inflation numbers are out later tonight, our time. So expecting a similar number to last month. It may come off a tad. But once again, a lot of the discussion out of the US this week has been Jerome Powell, what they're looking at of interest rates, and there's more and more certainty. Well, I don't think certainty is maybe not the right word about that rate cut in September.
In September, yeah, about 80% probability. And they're also saying, you know, there's they're very much the rhetoric at the moment is 2 rate cuts and the other one in December. So, you know, it's going to be the back end of the year is going to be a very interesting year. I think that September, October, November, December time frame plus an election in there. Yeah, strap yourself in.
Yeah, and if we look at the 2s and the 10s there, once again, they're coming off a little bit. That's going back to the start of the year. So they have come off a reasonable amount from their peaks back in, when was that, around sort of late April.
Yeah.
Now, a lot of that talk around the first interest rate cut is obviously baked in already.
Of course.
But once again, it all comes down to the commentary.
Yeah, the rhetoric, and you've just got to wait and see, you know, how that all washes over the market. But, yep, let's see the number. And he is very, I mean, you mentioned that, you know, he is in Portugal. He was in Portugal. He did very dovish, and I think that's going to be the state of play again, rolling in, you know, 2 months' time, a rate cut.
Yeah, for sure. Now, looking at, we look at the S&P and the NASDAQ, earnings season is about to start again tomorrow in the US. All the big banks come out first of all.
Yes.
We're saying earnings are stretched a bit, which is a fair comment considering where the markets are at. But what's interesting though is we talk about the big tech companies making up a very large proportion of both the NASDAQ and the S&P.
Of course.
And a lot of the other companies have had small increases this year, but some of them are just still flat.
Underwater.
So the breadth of that rally is not quite there yet.
Oh, no.
Which I think the market wants to see.
Oh, of course it does.
Because the concentration
is on the 7.
Is not
the 6.
Great. Well, it's great if you're invested in them.
Yes.
Because they've had such a fantastic run.
Of course. And it's pulled the market up.
Yes, it has.
Oh, the index.
For sure. But yeah, well, earnings season starts, so there's going to be plenty of activity over there over the next sort of 4 or 5 weeks, really.
Yeah,
as we see.
Exciting times.
Yeah, the banks first cap off the rate, which will be a good barometer for the rest of the market.
Yeah.
Finally, just looking at Brent and the WTI, sort of range bound. It's sort of up. It heads up to that $90 mark, seems to hit a ceiling and then it comes off.
It does, absolutely. You know, when you're looking at the chart from the start of the year, it's still, even we haven't seen big breakouts, but it's still, you know, if you're looking at the trajectory up from that start of January, just after Christmas, and we had, you know, WTI sitting at just about, you know, 73, and it did rally very, very strongly to 86, 87, then tail off back to its, you know, 73, and then it's back up again. You know, you just lay some technical analysis over it. If you're looking at long-term trading, that's why the energy markets are so exciting to trade. But yes, we might see some other breakouts with weather. We're worrying about as far as hurricane season, the impact to the Gulf. You're looking at geopolitical. All of these factors can come in and play a big, significant part to the cost of crude.
Yeah, it certainly has, but it seems to be under control at the moment. So, but we'll keep an eye on those. Once again, keep an eye on the CPI numbers. The GDP numbers are out in the UK as well, later today as well. So we'll keep an eye on that and touch on that next week, and we can chat about them then.
Yeah, and the Samsung issue, let's discuss that next week as far as the strike in South Korea and the impact that has naturally to production. So, yeah, industrial demands, and just interesting when you look at a case study like that.
Yeah, well, you look at that, and a competitor of theirs, Micron, in the memory market.
Yes.
So last night, Micron's up 4%. So, and Micron is the biggest memory chip maker anyway.
That's right.
But yeah, interesting where the supply chain side of things.
Oh, this is it. You can't meet production, and you've got no workers, and so yeah, it's just interesting to examine.
There's always something.
Oh, yeah, no shortage of information, certainly.
Yeah, but we'll keep an eye on that and regroup next week.
I'll look forward to it.
Great, thanks, Pete.
Thank you, Andrew.
And that's the XM.com weekly market update.